Hi, it's Heather Babb with Babb Family Homes, and I'm here with Kevin Johnson with CMG Home Loans. Hi, Kevin.
How you doing, Heather?
Good. How are you?
I'm doing great. Thanks for having me today.
Yeah, absolutely. Thanks for joining me. So, this is going to be on our YouTube. We're really trying to increase kind of our views there and really look at what some of the questions people have when they're getting ready to buy a home.
Sure.
So, first of all, tell me a little bit about your history. How long have you been in the lending business?
So I'm getting older. I've been doing this 27 years.
Okay, it's a long time.
It is a long time. I got in doing subprime lending from a friend of mine in college. Worked up in Indianapolis in the Bank One building for Bank One and did subprime lending. Which
Nobody knows who Bank One is, just so you
Yeah,
know. You know what
yeah,
I mean?
yeah. So,
I used to work for Merchants National Bank. Nobody knows.
I know now they're all kind of
Right.
gone. Like it's
Yeah.
the Bank One, and then it was subprime lending, which was, it was a great way to start out because, I learned the terminology, learned the language, and mortgage industry, which I had no idea what I was doing.
And it is kind of its own language, isn't it? Like, I'm finding that out just being in the real estate business for the last few months. It's a whole other
LTV, DTI,
exactly.
Ratios.
Yeah.
I mean, there's just all day long. So, being a mortgage loan officer has its own language. And sometimes we forget and we talk to other people like they know that, and they don't. So
Right.
gotta
Right.
make it basic.
So 27 years in the business.
Yep.
What's kept you in it?
You know what? I love it's a different challenge every day. I love people, and
You're definitely a people person.
Yeah, and I like problem solving and finding solutions for people. I just had a closing just the other day, and I got a really nice compliment from the guy. Sent me a letter, and so it just makes it rewarding for you. It doesn't matter the loan amount, size. But
Right.
I just like that. It's something different every day. I'm busy a lot. There's a lot to do every day.
And you've seen a lot over the years too, right? You kind of made it through a downturn in the economy when we went into a recession. We came back out of it. We went into a global pandemic, and that was, I think the unexpected of kind of a housing boom, right? So you've seen a lot, and that I'm guessing that experience helps you, number one, understand how the market ebbs and flows, right? So, talk it to me a little bit about. Let's really focus on the first-time home buyer because, we hear more and more in the news about young people not being able to buy houses and the average age of a first-time home buyer. I think I heard yesterday on a podcast that it was like age 38.
Yeah.
The average age.
Getting older.
So it seems as though the media says it's out of touch for young people to buy a home. But let's talk about how it really isn't. So what is just some basic advice when a first-time home buyer comes to you? What are some of the stuff that you
So there's a lot of programs out there. I think people get what I run into a lot. So think about this, 60% of the market is first-time home buyers. It's been this way almost the last 2 years. So there's a lot of programs trying to attract people. But not every lender is the same. You have different programs. So I would definitely check and talk to other people and open the doors to them. So really what I'm running into today is how much out of pocket and what's my payment going to be? Those are the biggest hurdles out there right now, but there are 100% programs. There are, low down payment, conventional type loans. So there's a lot of different type of products out there. And it takes that experience, really, to have a mortgage experience, to customize a loan that's specific to your needs. Everybody's different, I have people that are buying, real expensive homes, but really don't have any down payment, but make a lot of money. And then you have people that make a little bit, they don't have any debt, and they've got some cash. So that's, it does take that 27 years of experience to help customize a loan to that specific person. Like what happens with you go to maybe a local lender or banks, you run into a lot is we have one little box that you fit in.
Right.
And if you don't fit in that box, then people think they can't get a loan. CMG, we're the third largest servicer in the United States.
Oh, there you go.
So that's 100 billion, over 100 billion in servicing, which means we keep our loan. And then, and you can get revenue from that.
Okay. So great. So I think that kind of sets the tone for why it's so important that you work with somebody who kind of knows what they're doing, right? Because it can be very it's a lot. It's a lot to really take in, especially as a first-time home buyer, right?
Yeah.
So if I'm a first-time home buyer and I've come to you and I'm kind of I kind of think I know what my price range may be, but tell me, kind of walk me through that process. Like, I know there's an application, right? And is that something I'm going to do right away?
Yeah, typically we like to take an application at the very beginning because, like, let's think if you were going to have heart surgery, you'd want to know what you're getting into.
Right, yes,
so you're
I
gonna.
would.
So the credit report's kind of like our X-ray. We kind of see what's in there. So there's this preconceived notion that if I pull my credit up, my credit score is going to drop.
Yes,
I'm going to have a 680 score, and I go to 580 now. Like, it's not like that. Yes, you might get a dip for a little bit, but your score will go back up. But what we're looking for is we want to pull up your credit history. So they'll ask for 2-year residency, 2-year work history. So those are like the main things that they'll ask for, and then there's some other little fillers that are basic. Then what happens once we get the credit score? Then all these programs are based off of credit and income.
Okay.
So once I have your credit score, so let's say your credit score is a little bit lower. At CMG, we can go to 580 scores, and sometimes even lower, depending if they have a larger down payment, and we got some compensating factors. And so like a bank is probably going to be 640 credit scores, maybe 620. And then, so it opens the door to other programs that you can get. I think the 100% programs are a little misleading because people think, well, I don't have any money that I got to bring to closing.
Yeah. Okay. So talk about that, because it is. It's even as a realtor, I'm kind of like, what does that really mean?
Typically, we say about $5,000 is what you need for closing costs. Now you can have the seller. So like if I get a customer and they're approved, but they have a little down payment or money, you can write into their closing costs when you write an offer and say, let's get them $5,000 in closing costs. I want to go back to programs you were talking about with first-time home buyers. At CMG, we have a unique program where we have it's called our Home Funded account.
Yeah, let's talk about that.
And it's a $2,000 grant that we give to first-time home buyers.
Which means grant means you don't pay it back.
You don't pay it back.
Right. That's nice. So it's free money.
So free money.
Okay.
And that $2,000, it can go up to $2,000. So if you have a purchase price, we do 1% of the purchase price. So if the house is $150,000, it's $1,500. If it's $200,000, we'll give $2,000. If it's $400,000, max is $2,000.
Right. Okay. Right.
But it helps with closing costs, and it's saved many deals for me. And two people that are discouraged from getting a loan, once we're like, hey, we got a grant for that. Then there's another, and the great thing about ours is it's not income driven. So a lot of grants are for incomes. If you make $40,000, you don't get it, or this amount. So it's a small pool of people. Where our $2,000 is for borrowers, any price. You can make $1 million a year and still get it.
Yeah, that's great.